On February 10, 2025, President Donald Trump announced the imposition of a 25% tariff on all steel and aluminum imports to the United States. This move aims to protect domestic industries that were pivotal in securing his electoral victory in key states during the previous election cycle. Trump stated, "This is a big deal. A beginning of making America rich again," asserting that this blanket tariff will apply to all countries without exceptions. The tariffs come at a time when most of the steel imported into the U.S. originates from Canada, Mexico, and Brazil, China being less of a direct competitor. Exporting less than 2% of its steel to the U.S., these tariffs follow a week after Trump paused previously set tariffs on Canada and Mexico until at least March 1. Tariffs are essentially taxes imposed by a government on imported goods. They are intended to make foreign products more expensive compared to domestic ones. In Trump's view, these measures could rejuvenate American manufacturing by incentivizing companies to establish production facilities within the U.S., thereby creating jobs. The relevance of these tariffs extends beyond just trade. It reflects ongoing tensions in global commerce, especially between the U.S. and its trading partners like Canada and China. Market reactions have been significant. Asian stock markets experienced declines following Trump's announcement as investors expressed concerns over potential retaliatory measures and their implications for global trade dynamics. Experts offer varied opinions regarding these tariffs. Ari Walsh from UPI notes that while labor unions such as the United Steelworkers welcome the decision as a way to combat unfairly traded products, there is caution about potential repercussions for relations with allies like Canada who adhere to fair trade practices. In contrast, Danielle Kurtzleben from NPR highlights worries among critics that these tariffs might lead to increased costs for consumers on everyday products due to higher prices passed down from manufacturers reliant on steel and aluminum. The impact of these new tariffs could be substantial. Estimates suggest they may contribute an additional 0.4 percentage points to inflation rates in an economy already grappling with rising living costs. Items typically affected include vehicles, which can see price increases ranging from $1.00 to $1,500, home appliances, icicles, and beverages packaged in aluminum, cans, a sector already impacted by previous tariffs costing businesses billions. Historically speaking, this isn't Trump's first dance with tariffs. He enacted similar measures during his first term, which also resulted in mixed outcomes, while some domestic producers benefited initially from reduced competition. Downstream industries faced higher costs, leading many economists to argue that overall job losses outnumbered gains created by protective measures. A bigger picture reveals concerns about escalating trade tensions, potentially leading to wider economic disruption, akin to what occurred during previous trade disputes under Trump's initial administration. As Kyle Rodd pointed out in reporting for Euronews, there's fear simmering of a much wider global trade war. In conclusion, while Trump's latest tariff strategy seeks to bolster American manufacturing and revitalize local industries against foreign competition, deemed unfairly aggressive, particularly concerning Chinese exports, the broader implications raise questions about how long-term consumer prices will react as businesses adjust pricing strategies upward amidst changing costs driven by newly imposed duties. The complexities surrounding such protectionist policies highlight inherent risks not only for domestic economic health, but also international relations amongst critical trading partners.